So in our past setup, we learned using MACD on weekly with stochastic oscillator on daily. In this setup, we are going to learn using RSI on weekly and RSI on daily with moving averages plotted on RSI. So using RSI 14 period with 20 period moving average on weekly and using RSI of 14 period and 3 period moving average on daily. Look to trade into the direction of 20 period MA of 14 period RSI on weekly. For a buy setup, RSI on weekly must be above its 20 period MA. RSI pulls back to 20 period MA. When on weekly RSI pulls back to its 20 MA, on daily chart RSI must pull back to the level of 50 or lesser. Take a long trade when RSI on daily chart turns around, goes up after pulling back to 50 region and RSI crosses above its own 3 period simple moving average. Maybe it's difficult to understand now. Let's take some example and the concept will be clear to you. Following is a chart of Colgate Palmolive. To your right hand side is its weekly chart and to your left hand side is to your left hand side is weekly chart of Colpal and to the right hand side is daily chart of Colpal. In the lower panel on weekly chart you can see there is a 15 period RSI with 20 period simple moving average of its own, and on daily chart you can see there is 15 period RSI with 3 period moving average of its own. Now 3 period moving average is plotted because you can see they both 3 period moving average work as a signal line. That is, when RSI crosses above its own 3 period average, you can buy into the stock. When RSI crosses below its 3 period average, you can sell into the stock. The idea will be clear. Let's go ahead with our example and add some bars. You can see RSI has pulled back. On weekly, RSI has pulled back very closer to its moving average. But we need to see if our daily RSI is closer to 50 or below. Alright, we'll mark this as 50 line and change its color, something that is easily identifiable. RSI stands at 55 on daily. Let's add some bars. RSI has pulled back very closer to its moving average. And take a look at weekly RSI. You can see RSI has pulled back very closer to its own moving average as well. On daily, RSI has pulled back very closer to the level of 50. Let's go ahead and add some bar. Now, the idea here is on weekly RSI has pulled back to moving average and moving average is trending higher. So on daily, once RSI crosses above its own moving average, we are going to enter a long trade and we will hold that long trade unless at least RSI should reach above 70 or prices should make at least a new high. Alright, now that our trading idea is correct in our mind, the method is correct in our mind, let's go ahead and add some bars. Here RSI has crossed above its own moving average at this bar, so we will place a buy order above this price. Triggered, stop loss is kept at recent swing low, this one. Right, and let's go ahead and see what happens next. New swing low is given to us here and we are stopped out at this price. At the same time, prices went ahead to make a new high. As you can see, we are stopped out at this recent swing low, but we could have kept our stop loss much closer to the prices. Why, may you may ask why. You can see here prices have made a higher high. RSI failed to go any further, thus giving us a divergence, and a divergence is characteristic of a weak top, assuming the fact that this was a weak top, we could have placed our stop much tighter and to this low, stopped out at this level. Anyways, you can use as you wish, but you can see once you enter a trade how to manage your trades looking at the newer set of data that is given to you. Our next chart is daily chart of Dabur for the year of 2013 and for the month of October. As of our last bar, you can see in our weekly chart the yellow line is 20-day moving average of RSI on weekly chart, and yellow line is drifting downwards, suggesting us that the momentum is towards the downwards, which is confirmed by weekly RSI, which is trading below its own moving average. In our daily chart, RSI tends to hang around the level of 50. Let's go ahead and add some bar. Prices pull up strongly and RSI on weekly has pulled back to its own moving average, but moving average is still negative. The idea is to short into this trade once we get a sell signal on daily RSI, that is when RSI crosses below its own moving average. Let's go ahead and add some bar. RSI crosses below its own moving average. Moving average of RSI on weekly remains negative or bearish. We will sell below this low. If we are triggered, this recent high will be a stop. We were not triggered and RSI has crossed above its own moving average, negating the trade. Let's go ahead and add some bar. RSI crosses below again. We'll place a sell stop here. If triggered, revise the entry. Since RSI is still below its moving average, RSI crosses above its moving average again. Trade is negated. No trade is taken as of yet. Moving average has given a 10, a positive reading on weekly chart, but that can be at least you must keep, or you can keep at least a 1 bar benefit of doubt, as trading will not always happen in absolute terms. So since the week is not complete as of yet, I will give it a benefit of doubt and go ahead with my trading setup. RSI has again crossed below its own moving average. I'll place a sell stop at this level. Still not triggered, but trade is valid. Got triggered. Place a stop loss above the latest swing high. Now the idea is either prices must make a new low, break out below this low, or RSI must reach the level of 30. This is my stop and that's it. Let's go ahead and see what happens. Prices broke below the current low, the recent low. Our next chart is EduComp. Left hand side weekly, look at its RSI and you can see moving average of RSI is moving down, and as of the last bar, RSI has crossed above its moving average, but moving average has yet not changed its direction. Come to the daily and you can see RSI has reached the level of 62. So even in this trade, the idea is simple. We will take a sell trade on daily once RSI on daily crosses below its own moving average, as moving average on weekly is negative and RSI has pulled back to its own moving average. Let's go ahead and add some bars. RSI on daily crosses below its own moving average. Sell below this low. If triggered, this high will be a stop. Triggered, place a stop loss above this high. The idea is either this low must be breached or RSI must reach the level of 30. Alright, let's go ahead and add some bars. We'll revise our stop loss to this swing high. Now I am revising stop loss to every swing high because you can see RSI gave a crossover on daily chart. It was a failed crossover, which makes it a valid swing high. Hence I am revising my stops to those swing highs. One more failed crossover, swing high revised. One more failed crossover, swing high revised. RSI reached the level of 40 and RSI went ahead to make new low or test its own low. Alright, here you can see RSI has went ahead to make EduComp daily charts have went ahead to test its own low, and even RSI has reached the level of 30. So even using RSI on dual time frame, that is multiple time frame, a higher time frame and a lower time frame, can help you in devising trading strategies that will help you increase your success ratio and make profits.